I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Sam Kazemian, founder of Frax Finance. Sam, welcome to the show, and thank you for taking the time.
Thanks for having me on, Ashton.
You're very welcome. Excited to dive into all things stablecoins and DeFi. I think stablecoins are an especially important topic right now, with people trying to preserve their wealth and find ways to store their assets in ways that aren't going down a lot, and in the right assets, because even stablecoins can go down if something goes wrong. But I know you are a specialist in stablecoins, and excited to hear what the team at Frax is working on. But I'd love to start off our conversation with just a little bit on yourself, your involvement in blockchain, and what led you to founding Frax, and then we'll dive into all the details.
Yeah, for sure. Thank you. So I have friends and colleagues that call me the first stablecoin maximalist. So obviously I love this topic, and it's exactly what I do and what we do at Frax. So just a little bit background about me. I've been in the blockchain space for a long time, since 2013, since I was at college. And first I founded Everpedia, which is a decentralized version of Wikipedia. And then in 2019, I started Frax. Frax launched in late 2020 and now is the 5th largest stablecoin with over 1.2 billion in circulating supply, just under DAI. And so we're one of the 5 kind of really important stablecoins on chain. Frax is entirely on chain with all collateral and all kinds of market operations. And I think we have one of the most novel, stability mechanisms. And so I'd love to discuss it.
Incredible and great backstory. And there's a lot that people don't know about stablecoins, and there's a lot that goes into creating the perfect stablecoin that's actually stable and also has a long-term vision. With all of your research and work on stablecoins, I'd love to get your high-level opinion on somebody that is just getting into crypto and they also want to hold stablecoins. Sort of what makes the ideal stablecoin, and what are those green checks that people need to ensure when they get a stablecoin? It needs to have these things.
Yeah, that's a good question, actually, because there's honestly there's 2 types of stablecoins, and some people actually divide it into 3, but I try to be fairly simple at it. There's stablecoins with real world assets, so cash and bank accounts. People usually call these fiat coins. And then there's decentralized, stablecoins, which is the on-chain stablecoins, such as MakerDAO's DAI stablecoin, Frax's, Frax stablecoin. And so the main difference in these things is, are there real world assets? So do you have to basically trust some kind of custodial relationship, or basically trust that real world laws allow the stablecoin issuer, whether it's like a protocol or like Tether or USDC, to actually continue redeeming the stablecoin? Or if you are really crypto native and basically only want to see the collateral and the backing of a stablecoin in smart contracts on chain. Now, there's a 3rd type of stablecoin called algorithmic stablecoins and things like that. And obviously this past year, those have been in the news with Terra and things like that. And Frax, we call it a fractional hybrid stablecoin because it's actually not algorithmic. It's similar to DAI. It has a lot of exogenous collateral, basically collateral that backs the stablecoin, over collateralized loans on chain, things like Ethereum and other assets as well, and protocol controlled liquidity to stabilize the price using smart contracts. But the main thing is that I personally don't think the algorithmic under collateralized stablecoins work, especially after Terra and things like that. But Frax is basically a fractional reserve stablecoin, so it's actually similar to like a normal bank. In fact, it's named after that. It just uses smart contracts to do those kinds of market activities, right? So I would basically say, keep it simple, cut it into 2 things. Do you want a stablecoin that is backed with real world cash, or do you want a stablecoin that is still backed? It has to be backed. So let's not beat around the bush of like this crazy unbacked algorithmic stuff. It still has to be backed, but is it all backed on chain, or is there a partial real world asset cash balance or things like that?
Yeah, great point. And After the Lunaterra stablecoin crash, I looked a little bit into the stablecoins and what backs them, and I seen the portfolio of some of these centralized coins is also like commercial papers and equity of different companies that may not be 100% liquid, and it's got me interested more in the decentralized side, with DAI and Frax and how to put that all on chain. So exactly how do people, access it? Do they access it in the same way that they would of getting Tether or USDC in the way that they start accessing Frax and use it? Or what are the main differentiators in the usability from the end user's point of view?
Yeah, Frax you can get literally on Uniswap, on Curve. In fact, we're one of the top 5-6 largest tokens on Uniswap itself in terms of like the size, TVL, and volume. We're actually the second or even second or third largest stablecoin on Curve. We actually have a huge presence on Curve, which is a decentralized stablecoin and stable swap exchange. And I think you could just literally get it exactly the same way as DAI. You can sell it exactly the same way. That's also part of the features of Frax. So like if you're not deep in the weeds of like DeFi and you're kind of a retail user or trader or things like that, then it literally just looks exactly the same, and that's how it should, right? Like you shouldn't need to know where to redeem it. You should just be able to sell it on an exchange, on a decentralized exchange or something for $1, and you should be able to buy it for $1, right? That's how stablecoin that's working, that's like never lost peg. Frax has never deviated peg from $1 a single time in its existence, and so all of this is basically just same thing as the top other stablecoins like USDC, Tether, DAI, and things like that. Now, one thing that you said that is a good point is as you start getting more and more into stablecoins, right? And like I said, I'm really interested in stablecoin stability mechanisms, collateral types, and where kind of the future of stablecoins is headed. You'll start seeing and want to see, okay, what's this stablecoin backed by, right? Like, is this fiat coin backed by, commercial paper, which means loans to companies and things like that, which, as we saw this week with FTX and stuff, even companies that you think are safe or running a profitable business, they could just, completely go under for whatever reasons, whether fraud, crime, or just something that they go bankrupt, right? And so you start exploring these kind of different collateral types. You start thinking, okay, do I want a fiat coin that's backed by this stuff, or do I want an on-chain stable coin that has ETH as some collateral, or do I not like ETH? Do I think ETH is going to go so down so quickly that you can't even liquidate it for on-chain loans or something like that? And so that's kind of the next stage of getting into stablecoins, analyzing what I call the balance sheets, right? The stablecoin balance sheet analysis. And so you're totally right in that Tether used to have a bunch of corporate paper, right? They used to have a bunch of backing of debt by companies. That was actually the thing that backed Tether. Now, they said it was very safe, stuff like Apple and these kinds of companies, that there's no conceivable way they would go out of business. But you can't know for sure, right? You'd have to take their word for it. And so it's a little bit kind of weird, because that's also another thing about DAI and Frax being entirely on-chain, is you don't have to take our word for it, right? So for example, if I say, oh, Frax is backed by other stablecoin safe assets and some ETH and some WBTC or whatever, you don't have to believe me. You can actually just go on-chain, even if you think we're lying about our front end or something, which we display in real time. Again, you don't have to believe me. You can just click the smart contracts and actually see the collateral and the protocol control liquidity in all of these places. And that's what's really the differentiating factor, because you see all of these things like what's going on in FTX and how they were kind of either straight up lying and criminal fraud, or they were just not even disclosing things, whatever it turns out that it's being. I think it's probably pretty dark, but you would never be able to know, right? For example, it's literally impossible for MakerDAO or Frax to do any kinds of things like this, like loan out or move the collateral, because everyone would be like, hey, wait, what's going on here, right? And there's also just no permission to even do that, right? And so smart contracts don't let you just move them out and misbehave in ways that they're not supposed to and intended, right? And so that's one of the main things is that the auditability that more and more people demand for things that are systemic, whether they're exchanges that are systemic or large stable coins where if one of them went under, everyone's like life savings that they store in that stable coin is basically gone or like much lower than they expected, right? So these kinds of things are where you desperately need on-chain kind of proof, and it makes things even better. So that's one of the main advantages there, in my opinion.
Great explanation, Sam. And I feel like for the regulator side, on-chain proof isn't enough. I feel like they're working on bills to regulate cryptocurrency, starting with stablecoins. It seems like I think I saw some proposed bills that had stablecoins in the name. Probably, more importantly, after the Lunaterra crash, and now with the FTX insolvency, I think Sam was close to working out some deal of starting a stablecoin. Thank God he didn't get that far. But on the regulatory side, DeFi is I think it's hard to regulate DeFi because there's so many different parts to it, but stablecoins are such an integral part of DeFi, and I see some potential for the regulators to come in and try and regulate stablecoins in certain ways. With you being in this part of the industry, what do you see happening right now with the regulation around stablecoins, and where do you see it going?
Yeah, I mean, so far, I think it's actually been fairly reasonable and mild. Now, obviously, one of the things is we have no idea what the FTX blowback, right? Like, I have no idea if that's going to lead to crazy stuff with stablecoins itself or DeFi as a whole. So, like, I'm kind of anxiously waiting to see what's going to go there. But I think the most important thing, and I think Eric Voorhees said this really well in this like now famous debate with SBF, which is now like an infamous debate, is that where SBF was trying to I guess defend the need for like certain regulations that I personally found indefensible, like making certain front ends like illegal to run unless you're licensed or things like that. I think it's important to not lose sight of a lot of the stuff that Eric Voorhees was actually describing in that debate. Namely, one of the main ethos for crypto is the separation of like church and state. The whole point and ethical reason for crypto to exist is there's new alternate financial system. It doesn't mean that it doesn't is not affected by laws of finance. Obviously, there's a lot of things crypto is learning from finance and reliving certain experiences and trying to make itself better in that timeline, right? There's a saying that like crypto just is speed running finance in like a 10-15 year period, right? And so I think obviously certain kinds of disclosure and regulation for stablecoins that are fiat backed are required. I personally don't really think even that should is too much. That's fine, right? If you're a large stablecoin issuer like Tether, USDC, Paxos and things like that, you should legally have to give an accounting of your reserves, right? I mean, like if smart contracts don't force you to do it like they do with DAI and Frax, the law should. But that's about all. I think one of the main things that I'd be against, and I think is unreasonable, is forcing stable coins at the protocol level to have blacklists, especially things that have all of their collateral on chain, like DAI and Frax. I don't think that's going to happen. I haven't seen it in that way, so I'm pretty hopeful. But I think that's a seminal thing that we have to keep an eye on and actually make sure that this kind of new things that are coming up in Washington actually get these regulations right. So.
Definitely. And with those more centralized stable coins where you have to have that trust factor, you have to trust Tether or Circle that they're doing all their due diligence and being a fiduciary to the users. That's where, the regulatory environment sort of makes them follow those rules. But on the decentralized side, as you said, the smart contract is transparent. It shows everything in order. Is that enough for the smart contract to be sort of the code is law and like everything is here and this is how it works, so we shouldn't need regulations to enforce what we can already see happening through the code?
Yeah, I'm actually pro regulation that's disclosure type of regulation. Okay, so like I think regulatory disclosure requirements are fine. So like I feel like I obviously don't want to say anything with for Eric Voorhees because like he did such an incredible job in that interview. But I feel like disclosure he would be okay with, and so like I see a lot of similarities between my view and his after seeing that interview. But definitely not okay with regulation in terms of like, you know, it has to have like blacklist or certain types of stablecoins are illegal or something like that, which would destroy like innovation and also being able to design new mechanisms and things like that. Imagine if in like 2014 or 15, for some reason, some laws came into effect and were like proof of stake is illegal. It's a security. Like we already know how blockchains work. They're all proof of work. So only proof of work can be allowed legally. And so like Ethereum couldn't design proof of stake. Other things couldn't design proof of stake. That would be ridiculous, right? It would have killed the industry nascently if you thought that only proof of work was okay, right? And so same thing. I think disclosure regulation is fine, and Frax by definition passes all of those disclosure requirements, no matter what they would be. You know, front end designers can just structure the data properly if, like, you know, it's required to be reported in kind of a balance sheet like statement or whatever that looks like, and that's totally fine, and that's great to make these kinds of things standard, right? I would heavily support things like that because Frax already complies by definition. So does Maker with their DAI stablecoin. But anything that specifically makes something illegal or a higher kind of like a higher class of like legality or like a privileged actor in the space, I think is totally misguided. In fact, I made a tweet to SBF during the whole like kind of time where there was this the debate with FTX's policy and stuff when they released it. The way they wrote their stablecoin policy was like only fiat coins are legal. It said something like if you're claiming to be a stablecoin, you need a bank account or broker account with extremely liquid assets of cash or U.S. Treasuries, and that's that's a specific type of stablecoin. That's like USDC, and that's awesome. But like saying that should be the preferred legal language for what a stablecoin is like absolutely ridiculous. And you know, I think they clarified it or something that was like, okay, that's only for the fiat coins or something, but it was poorly written, and so like I had a lot of problems with it. And I don't know, I guess it turned out that, you know, that a week later that it's probably never going to actually make it to a constructive desk in DC. But yeah.
Great insight, Sam. And looking towards the future of DeFi, I feel like a lot of people that are watching that aren't really deep in DeFi don't understand how important and interconnected stablecoins are for DeFi, you know, because they hear, you know, very high risk and there's things with high APY, and normally you don't think stablecoins are giving, you know, higher returns, but I feel like they're pretty interconnected, and I'm sure you would understand this running with Frax. With the future of DeFi, say there is regulation versus, you know, centralized stablecoins as we talked about and the decentralized ones, where do you sort of see the future of DeFi years down the road if the regulation does come in? Do you see it primarily with these decentralized stablecoins, or will the regulation not matter if it happens and people will still use Tether and USDC for DeFi?
Yeah, I think so. So the first thing is you're right in terms of any stablecoin, in my opinion, that's over like $1 billion above market cap, which is like Frax, DAI, BUSD, USDC, Tether. These are kind of systemic, like obviously, you know, USDC and Tether more because they're significantly higher than a billion market cap. But if you think about it, if any of these stablecoins even depeg, right, like not even need to go to zero, but like they depeg and stuff, they break a lot of things, right? And so like also DAOs and you know, projects that hold them, you know, for savings and stuff will end up having much less than they actually thought. Those are like their savings for paying, keeping the lights on, right? Payroll and things like that. So I would say any stablecoin that's above $1 billion in market cap is kind of systemic-ish, right? In DeFi. I personally think that there's going to be like two classes of stablecoins going forward. People will still use USDC and USDT and all of these things, but there will be kind of more and more on-chain stablecoin innovation and safe stablecoins on-chain that'll make a name for themselves, just like DAI, just like Frax. There's CRV-USD, which is Curve's new stablecoin that they're coming out with soon, and then Aave, which is one of the largest, if not largest, lending on-chain lending system, right? They're coming out with a stablecoin they call Go, and that's going to come out soon, I think. And I think both of these two stablecoins will likely have over $1 billion in supply if they're successful. And so there will just be a lot more safe choices, and people can decide for themselves whether they want to hold a fiat coin or CRV USD or Go. And then the other thing is, one thing I'm very, very big on is stable coins that aren't just pegged to the dollar or national currency. So Frax actually has a second stable coin called the Frax Price Index, or FPI, and it's the first and only stable coin right now that's pegged to the consumer price index, the basket of consumer items that the dollar is actually trying to track, right? Inflation is defined as the deviation of the dollar to the CPI, which, as we know, in the past year or two has been very, very high historically. And so the thing is, the FPI is just pegged directly to the CPI, so it's actually, some people call it an inflation resistant stablecoin, because by definition it just tracks the basket of consumer items. Now, the long-term goal with the FPI stablecoin is to allow people to vote for what the actual composition of the CPI basket is on chain using governance tokens, right? And so it's an entirely, essentially, self-governed kind of DAO with its own monetary policy. And so you can actually save in this FPI stablecoin and know what your currency is worth in terms of purchasing power. And instead of looking at the Fed or to a national government or something for the peg unit, right, which like all dollar peg stablecoins do, you can actually create kind of a sovereign peg on chain, through governance. And I think the idea is still early. Like FPI's market cap is pretty small. It's 70 million, but it's growing. But I think the next, generation of stablecoins and the next kind of evolutionary cycle, perhaps like next bull market, if you will have a large growth of these kind of self-sovereign pegged stablecoins that actually make sense, right? The pegs are something that there's a commitment to, right? This monetary policy makes sense. You are intending and wanting to save in this peg. It's not like a random peg to like, something like Bitcoin or something that you could just buy the Bitcoin instead, right? It's an actual peg that's to a basket of real world assets, right? And I think that in order for crypto to ever be like fully, entirely a sovereign economy, kind of like a digital, planet, but on the internet only, right? We need a stable coin that's actually, decided on chain, what the peg is, what the monetary policy is, rather than just having a oracle that just listens to the Fed's pricing of the dollar.
Yeah, that's a great point, Sam. And a lot of these stable coins, if they're backed on the US dollar, on the surface it shows $1, but we've seen the inflation and it's probably understated. It's probably a lot worse than we think it is, and it only continues to get more inflated each year for the past 100 years. So $1 becomes significantly less, and that would be the same for those stable coins that are pegged to $1. You need something that takes the CPI into account, or some buoyancy effect that will actually preserve the true dollar, and not just the dollar that you hold on the piece of paper. That it's hard to tell if the goods around you will still be able to purchase the same amount of purchasing power with that dollar. So I'm really looking forward to seeing how that grows out, and hopefully that becomes more of a hot topic throughout the next cycle, with more interest in these decentralized stablecoins. Now, Sam, leading up to that, throughout 2023 and over the next year, what are some of the main initiatives for Frax Finance that you're focusing on to grow?
Yeah, definitely. So I think the most important thing in terms of like DeFi is this thing I call kind of like the Trinity stack, which is all of DeFi is essentially just different versions of stablecoin, lending, and liquidity. So these three things. And Frax actually has all three, right? Frax, stablecoin, also FPI, and then it has Frax Swap and Frax Lend. If you think about it, all large projects that start in one of these areas, like lending or like liquidity, which means like decentralized exchanges, they go towards the other two to kind of expand their market share, right? Because the DeFi stack is basically this 3-point triangle. Like for example, like I said, Aave is one of the largest lending protocols. Now they're releasing a stablecoin, right? And so like if that goes really well, I think the last frontier that they have is some kind of swap. I don't know if they're really even thinking about it yet, but that's what they'll eventually most likely have to do in order to kind of grow into a huge protocol. Same thing with Curve. They're a DEX, right? They're a huge stable swap DEX, and so now they're releasing a stable coin. Well, eventually they might think about lending and leverage and things like that, right? And Frax already has all three of these things, and we're just going to continue to build out this on-chain kind of Trinity infrastructure. And Frax Lend is doing well. Frax Swap, which is kind of an innovative AMM that uses TWAMs, which are time-weighted average market-making orders, and so that you could do large movements of collateral and large swaps with minimal slippage. And I think in this market, projects will probably try to build up their presence, right, in this kind of 3-point stack. And so if they can do that, right, if they can actually deploy these things on ETH mainnet, on the L2s and things like that in the next bull market, I think there will be a lot of very cheap, both in terms of gas, but also low interest rates and things like that of financial instruments people can use. And so I think the growth potential in like the next bear market, next bull market after this bear market, will be much bigger than this bear market is actually showing. Right now everything is getting really pummeled and just bad news after bad news after bad news. But I'm pretty hopeful that after things turn around, probably towards sometime in 2023, it'll be really interesting.
I'm hopeful as well. And what's the best way to follow along with the Frax stablecoin and learn about the DeFi initiatives that your team's working on?
Yeah, you could follow us on Twitter at Frax Finance or Telegram. Our main community channel is also called Frax Finance on Telegram. You can also follow me, Sam Kazemian, on Twitter, and that's basically where we're most active, Twitter and Telegram.
Sounds great, Sam. Thank you so much. I will leave those links in the description box below as well. Appreciate your insights into stable coins. All the best with everything with Frax Finance moving forward, and let's follow up in the near future.
Thanks, Ashton. Take care.